We're at a decision point and close to a recession, and I'm scared about something worse if this isn't managed effectively. A recession is 2 negative quarters of GDP, and if it goes slightly there, we constantly have them. We have something deeper. We broke the monetary order and we'll change it because we can't spend the money. We have that issue. When we talk about the dollar and tariffs, we have profound changes in our domestic order, how ruling is existing, and in the world order, which is very much like the 1930s, which I've studied. Tariffs, debt, rising power, challenging authority and order changes disturb systems. In my 50 years of playing markets, I've been startled by how something may be managed. It could be worse than a recession or handled effectively. Because those things never happened in my lifetime, I was startled. I discovered they occur frequently in history. I researched the 1930-45 Great Depression. Our systematic approach to the economy during depressions and difficult times helped us during the 2008 financial crisis. 3 major events drove me to study, which resulted to my book, Principles for Managing the Changing World Order. Other than the 1930-45 period, those 3 elements involve massive debt creation and monetization. Internal conflicts, populism of the left and right, never happened in developed countries during my lifetime, caused by the largest wealth and values differences, irreconcilable differences, which could lead to a civil war, not necessarily with guns, but certainly is leading to great conflict and dysfunction in government, not just in the US but elsewhere. Naturally, big power confrontation is the 3rd major factor. In other words, powerful powers win wars in cycles. In 1945, the dominant power set new regulations of the game. Then comes peace and wealth. Over time, other countries like China became competitors. There are 2 more factors I found. The Big 5 includes acts of nature, droughts, floods, and pandemics, which have generated more debts and overturned more orders than the previous 3. Big technological advances like the industrial revolutions have occurred throughout history. A fact, AI and other technologies are causing revolutionary changes. I call that the Big 5. Before I discuss the major 5, let me show you a bit from my Shifting Global Order video, about 40 minutes long. I'll show you 4 minutes of the video to illustrate the cycle. I don't mean anything's predestined to work in a cycle, but there are cause and effect links like any cycle. And there are health markers that can be seen, quantified, and expected to assist predict the future. I'll show you the trend I've noticed from analyzing the last 500 years, which is in my book, Principles for Coping with World Order Transition. I studied the 10 most powerful empires of the last 500 years and the last 3 reserve currencies, including the rise and fall of the Dutch Empire and Guilder, the British Empire and Pound, the US Empire and Dollar, and the Chinese Empire. The Dutch, British, US, and Chinese are the most important, so you'll see the pattern. Let's reduce the form. They occurred in 250-year cycles with 10 to 20-year transition periods. Leading powers rarely fall without a battle, therefore these transitions have been violent. How do I measure empire power? I employed 8 metrics in my investigation. Averaging each country's power yields its total. Education, creativity and technology development, worldwide market competitiveness, economic output, share of world trade, military strength, financial center power for capital markets, and reserve currency strength. Because these powers are quantitative, we can see how strong each country was in the past, and whether they're rising or falling by examining sequences from several countries. Because the wiggles can be confusing, we can reduce it to focus on the cause and effect links that drive a typical empire's rise and fall. Better education usually leads to more invention and technology development, and with a lag, the currency became a reserve currency. These factors then dropped in a similar manner, reinforcing each other. Look at the normal sequence of events in a country that causes these spikes and decreases. The large cycle usually starts after a significant conflict. War often establishes the new international order and leading power, and peace and prosperity follow because no one wants to question it. As people adjust to peace and prosperity, they gamble more and borrow more, causing a financial bubble. As trade grows and most transactions are made in the empire's currency, it becomes a reserve currency, creating even greater bond while wealth is distributed unevenly. Thus, the wealth gap between affluent and poor increases. After the financial bubble bursts, money is printed and internal strife between rich and poor increases, leading to a revolution to redistribute wealth. The empire loses power to rising rivals while it suffers with this internal conflict, which might be peaceful or civil. When a new rising power can compete with a dominating state undergoing domestic breakdowns, external confrontations, usually wars, occur. New winners and losers emerge from internal and foreign battles. Then the winners form the new world order and the cycle continues. Based on my calculations and understanding of debt production, the Big 5 are the same for individuals, companies and governments, except for the government's power to print money to pay debt. Thus, Debt is a promise to repay money, and a good system rewards it. High interest rates benefit the lender-creditor. The lender or creditor can have a high interest rate, so they earn a decent return, and the borrower doesn't suffer financially. That gets harder as debt climbs relative to income. Large debts are expected, especially in the US, but this is a global phenomena. Social programs, military and other areas just lack funding. As debt rises compared to incomes, central banks will face a dilemma by buying debt on their balance sheets. So that's a perilous condition that changes. Though not urgent, it will be affected by other events. Each of these 5 affects the others. The interplay in establishing that cycle is vital, as is internal strife, which is this year's centerpiece. I'll let you decide, although there are huge distinctions and concerns. Both parties contain moderates and extremists, and fanatics will certainly fight. In the Trump presidency, you're getting more nationalistic, isolationist, protectionist right-wing policies that are likely to protect the wealthy and corporations. On the left, most of those policies are somewhat different, but there's broad agreement on anti-China policies. We will learn a lot about these and their policies. You all witness the second, third, or whatever influence of the great power war. China and the US face different problems. China's debt and economic issues stem from real estate. President Xi stated, a 1 in 100-year storm is coming. Domestic issues too. Climate has long been a problem for China. Financial concerns and a top-down autocratic style to power consolidation and operation. Of course, the US has internal conflict and other issues. If you read history, economic warfare precedes military warfare. Thus, that has huge global ramifications. I have no military combat insider information. Everyone sees the issue. I doubt a military conflict is imminent. The one China policy with Taiwan will not last forever. That has raised concerns among international investors about government repercussions. For instance, American investors in China may face government penalties. Additionally, China may complicate that. And then there are ideological questions like, is wealth still glorious in China? Market economy continuity means what? How will that work? And how are properties protected? Common prosperity issues, how are they? How does that look? So you're exposed to evolving situations that cause risks, challenges, and financial movements that transform the planet. Chinese producers producing in the AC in Vietnam and Mexico, for example. All that works, how? The landscape is changing. Economic sanctions or an exchange of them may be disastrous for the world. So there are risks. Meanwhile, Chinese assets are cheap, and we've done well. Bridgewater has performed well in there for 5 years. There are successful ways to invest in China. The fourth factor is climate change, droughts and floods, and pandemics which have shaped China. To try to keep climate temperature levels from rising to 1.5 degrees, invent new technologies, pay for damages, or build infrastructure to protect oneself around seawalls and other things, this will be very financially costly. Annual cost is estimated at $8 trillion. That $8 trillion a year is 8% of global GDP. It will disrupt migration patterns and have major impacts. Naturally, technology was number 5. I believe we are experiencing the largest industrial revolution changes. I look at history and think about how amazing the printing press was for spreading knowledge and building on it. Of course, the industrial age followed the agricultural age, when humans found that machines could accomplish many things. That caused a huge economic boom. Naturally, the digital revolution has embraced all its many forms, as you know. This technology revolution, AI, when you start to think, touches everything. And the ability to supplement one's thinking or do work that could have been done less effectively at more costs by people and the productivity impact. But also technology could be used for war. This tool is great, and we're approaching an unanticipated period. So those 5 elements are linked and will affect, but we're approaching a riskier age, and I'd emphasize diversity. If you can locate solid, uncorrelated return streams, you can boost your return to risk ratio by a factor of 5, making diversification more powerful than good decision-making. Diversification involves larger diversification of countries, asset classes, currencies, etc. I seek for 3 things in countries. I suppose I search for it in organizations, governments, and people's financial management. First, does the nation earn more than it spends? Does it have a good income statement and balance sheet to handle the issues? The second is a healthy competitive and collaboration atmosphere that boosts productivity through strong leadership and productivity. Hash 3, is it a country at risk of war or stuck between countries? War and commercial behavior were my studies. 3 sorts of countries are war winners, losers, and neutrals. Neutrals fare better than war winners, who nonetheless pay a heavy price in money, lives, and destruction. Of course, war losers lose everything, which is terrible. In considering a country's financial health, how well do they collaborate to be productive? And are they at risk of a conflict that might interrupt that? When considering diversity, I look at that. I worry about debt and asset returns while diversifying asset classes. Debt monetization is high. Central banks own many of the debts. They lost those debts. If things continue, they must monetize losses. Along with one man's debts or another's assets, that's late cycle inflation. A meaningful return of 2% is needed now. This is a nice indifference rule. Point. Equilibrium requires 2% real return, so monitor that real return to determine if it can be maintained without the debt squeeze. Debt assets bother me for those reasons. I like equity. I recommend adding gold to the portfolio. Gold is an alternative currency. It is the third largest reserve currency behind the dollar and euro and ahead of the yen. I would diversify and focus on those. These are my general thoughts. They will drive. Again, diversifying in productive contexts, like neutral nations like the AC on countries India and the Gulf countries, is crucial. The Middle East is at war, but for numerous reasons they're unlikely to intervene. Everything is unknown, but it's productive. Considering geography, you'll keep investing in the US. When I think about diversification, including new technologies that will be transformative, only the US and China are big players. I recommend diversification and China investing. As with other assets like gold, you need to monitor your quantities in each area to spread them out. Again, maybe 10% in each in uncorrelated investments.